so okay. So on page 370 then, the first part then, page 368 to 370, you can dig that out for yourselves. The consistency, disclosure, materiality, conservatism, and controls. You could do short exercise 1 if you wanted to. We're not going to. But the costing method's on page 370. So, page 370? No. Page, okay. We'll start with the perpetual inventory method on page 371. This is keeping track. You need to know how to do one of these. You will do one for homework. You could be asked to do one for your exam. So you need to learn to do the perpetual inventory record. So let's look at this illustration they have. Exhibit 6-1. It is a model of tablets, handheld, a tablet, that Smart Touch Learning is selling. Remember that we did that in chapter 5. They bought some tablets, they returned a few, then they paid for them, $210 net 30 or whatever it was, right? That was chapter 5. Well, now we're going to keep track of how many we have on hand, and what the ending inventory is, and what the beginning inventory is. This perpetual inventory record at any point in time tells us how much we have and what's invested in them. So it says at the bottom of 370, Smart Touch began August with 2 of these 2 tab 0503s in inventory. And we buy 4 more on August the 5th. And so now we have 6 on hand. On August 15th, we sold 4 of them, which means we have 2 left. And we bought 12 more on August 26th and sold 10 on August 31st. So that at the end of the month we have 4. Are you seeing this in your mind? You start with some, you buy, you sell, you buy, you sell, you buy, you sell. At the end of the month you got a few left, right? So far so good. Well, the thing is, when we bought them all for $350. So it's pretty easy to say the ones we have in ending inventory are $350 because they were all bought for $350. But what if not? What if we have different prices, right? So that, and they do that on page 372, which is where they give you these 4 costing methods. The costing methods are all 4 GAAP. They will result in different amounts of cost of goods sold, therefore, different amounts of gross profit, therefore, different amounts of net income, and different amounts of inventory on the balance sheet. All 4 are going to have different numbers. So what we have to do is choose one, disclose it, and use it consistently. Now the first one is specific identification. It's on page 372. These would be probably pretty easy because they're a $350 item. That's pretty big stuff. They probably have a serial number. So it's really easy for these tablets to do specific identification and to know which ones were sold because they've got a serial number. Think about a car dealership. Today we sold the blue pickup truck. Well, it's got a VIN, right? And so you would just pull out the invoice for the blue pickup truck, debit cost of goods sold, credit inventory for the amount that you paid for that. You follow what I'm saying? That's real easy, okay? And you are going to use specific identification for things like the manufacturers of farm machinery, because they have serial numbers. They're real easy to identify. Or a general contractor that has an address for custom-built homes. You would do specific identification. This is the inventory price of that house. And then when you turnkey, you sell it to somebody, credit inventory, debit cost of goods sold, right? It's real easy for big ticket items. Okay, but let's think about nails. We went to Lowe's yesterday. It seems like we're always going to Lowe's, the men's toy store. And yesterday we bought 5 pieces of PVC. They were 50-something cents a piece. you know, oh, for crying out loud. And, but Gary was working on the sprinkler system, and so he needed these little pieces, so we went. And, so could we do specific identification for those little pieces of PVC or for the little nails? Could we? Yeah, you could have some little guy in the back room with an engraving tool, engraving a number on every nail head. How stupid would that be? The cost-benefit analysis there that's ludicrous, right? Does it really matter? Right? Because a 1-inch steel or aluminum or whatever, rust-proof nail is a 1-inch, whatever, right? They're homogeneous, they're the same. So it doesn't really matter. So we would not use specific identification for nails or for PVC. Or in my husband's company, for the concrete block. Could they put a number on every block? Yes. How stupid would that be? What a waste of labor, right? You could. You wouldn't. Custom furniture, yes you would. Mass-produced rocking chairs, you would not. Does that make sense? So you think about, you know, this is that particular job. It's got that person's name on it. It's got that address. It's got that serial number. That's when you use specific identification. And so we could do that. And so what they did was, on page 372, they give you a new set of data. It said instead of, actually it starts on the middle of 371, 2/3 of the way down. But what if the unit cost does change? Instead of buying every tablet for $350, our prices change. Doesn't necessarily mean our sales price changes. Okay? Because we are limited by our competitors and substitutable products. You learn that in economics. I'm not here to teach you that. We may or may not be able to change our sales price just because our vendor is charging us more money or less money. Okay? But it says 2/3 of the way down to 370. Well, what if the unit cost does change? For example, what if the cost per unit increased to $360 on August 5th and $380 on August 26th? So we started buying tablets for $350. We had some in inventory that were $350 ones. And then we bought some for $360. And then we bought 12 more for $380. The question is, our ending inventory of 4 at the end of the month, which ones are they? Which ones are they? Well, if we use the serial number, we can specifically identify, we know it's that one, and that one, and that one, and that one. Specific identification we're not going to do very much on, because it's really easy. They know exactly which ones were sold. Okay? They got a serial number. And so that's enough for specific identification. More likely than not, we're going to use one of these 3. First in, first out, FIFO, first in, first out. So first in are the first ones sold. Think lettuce or the meat department. They're going to put out the oldest produce. They're going to put out the oldest bread, the oldest meat, these perishable things. They're going to do that, right? That is the actual flow of inventory. Now, we could still account for that bread with the weighted average or the LIFO or, heaven forbid, specific identification. All right? But that's what it really looks like in your mind. If you have to have something that it looks like, FIFO is like your produce. That you're going to put the oldest stuff out front, so the people who are in a hurry just grab the front one. Now, I don't. You know, I'm going, yeah, we're there. You know, as long as I have time, I'm going to look for the one that looks the freshest and has the latest date, expiration date, right? But sometimes you just grab the one in the front. So far, so good. That's FIFO. The first one's in are the first ones sold. So in this case, with Smart Touch, the first ones that are going to be sold are the $350 ones, right? Does that make sense to you? The opposite of that, think nails or think PVC. LIFO, the last one's in are the first ones out, okay? Because if you've ever been in Lowe's or Home Depot, they got a lot of things in their electrical and their plumbing and all these different departments that are just bins of stuff. You know, I mean, how many different pieces of PVC can you have for a sprinkler system? Who knew? It's hundreds. It's amazing. But what they do is, as they take inventory, or as an employee walks past and says, oh, there's only 2 or 3 left in that box, what do? They go get a box out of the back, they open it, and they dump it on the bin, right? So that the one that you're going to get is the most recently purchased one, the last one in. That's LIFO. The last one's in or the first one's out. Think nails, think PVC, right? You're just going to throw it on the top, and you're going to be taking the most recently purchased ones as you walk out the door. So far, so good? And those in the bottom of the bin could have been there for 3 years, right? But they're all the same, right? If it's something that's perishable, they're going to actually be churning that up and or making sure. Now, like when I do our vitamins every morning, I make sure that I use up the old vitamins before I replace in my little vitamin canister, because I don't want one that's been there for 5 years. Like that, right? So I actually do FIFO with my meds and our vitamins, and we take a lot of them. We're old. And but even if we were accounting for them, we could be using LIFO or weighted average, because these are all cost flow assumptions. We choose one, and we stick with it consistently, and we disclose which one we chose. Okay, so FIFO, LIFO, but then you also have average. That's on page 377. When I think of average, I think of gasoline. You ever been, I'm sure you have, to a gas station, and they have their big tanker there filling up, right? So they take the manhole cover off, and they dump the gas in to refill it, right? Well, they're not pushing over the old gas, right? It's just all mixing up in there. That's your weighted average. It's just all mushing up together. You don't really know which gallon, was it last week's gas that came in, or was it this week's gas? It's probably a combination of the two. It's all mixed up together. Are you with me so far? So when I think of average, I think of gasoline. And in my mind, that's what it looks like. So far, so good. Any questions? Okay. So now let's go to the perpetual inventory record for Smart Touch Learning. First of all, on the bottom of 372, the specific identification, you have to specifically know. Look on Exhibit 6-3, page 372. They knew that on the 15th, they sold one of the $350 ones and 3 of the $360 ones. Well, there were 2 of the $350, and there were 4 of the $360. So now what do we have? 2 minus 1, we have one $350 one left. And we sold 3 of those 4 that we bought, so we have 1 of the $360 ones. Are you following me? Can you see them in your mind? Okay, we specifically identify. And then we bought some more for $380, but when we sold, we made sure we knew which ones we sold. We sold the $350 one, so we don't have any more of those. We still have a $360 one, and the rest of them were the $380s. If they're all exactly the same, it doesn't really matter. But if we're keeping track of the identification number, serial number, or whatever, then we could do that. And with computer technology, it's not hard to do that. Okay, we just bought a new garbage disposal because who knew, 22 years and it went out. And it actually had a model number and a serial number, and I registered it because I get a coupon for something. I don't know what it was, so I did. So a lot of companies do, even their smaller items. This is like $100, $75 or whatever. But you have it, you might as well use it. And they could do specific identification for that. Okay. But FIFO, let's look at that one. Now, the first one's in or the first one's out. So, page 373. The perpetual inventory method, by the way, this is the way you do a perpetual inventory record. There are 3 sets of 3s. Okay? The first set of 3 is the purchases. The middle set of 3s is the sales. And the last set of 3s is the ending inventory. What's left so good. You need to memorize this and do this with me so you know how to do a perpetual inventory record. But the nice thing is, once you know, these are the buys, the sells, and what's left. The buys, the sells, and what's left. You always begin with what was there last month. Whatever's at the bottom down here for June, we have 2 at $350 each. That goes July, the first line. I'll say that again. Last month's ending inventory, the last line, we have 2 tablets, $350 ones. So in July, that would be here, beginning balance. So you always start with your beginning balance. Okay? That's your first line. You also have some subheadings. But the good news is, all 3 subheadings are the same for all 3 of the 3s. Okay? So it's quantity, unit cost, total cost. So here I go. Quantity, unit cost, total cost. I'll just do TC, total, or T cost. How about that? Total cost. Quantity, unit cost, total cost. Quantity, unit cost, total cost. Are you with me so far? How many, at what unit price, and then you do multiplication. So here on page 373, August the 1st, which would be the July 31st balance, we had 2 $350 ones. And I'm going to do this one line at a time, and then we're going to come back and do one together. Okay? So we have 2, this is the beginning balance, $350 ones. 2 times 350 is $700. Yes? We had $700 of tablets there on August the 1st. This is not hard. Don't make this hard. Okay? And then what happened? On the 5th, we bought. These are buys, sells, and then there's always what's left. So every time you'll either do something here, or you'll do something there, and you'll do something there. Either the first set or the second set and the last set. Are you with me? And so this was a buy. We bought on the 5th, so this was August 1st. On August the 5th, we bought 5. Each of them cost $360. 5 times 360, we debited inventory and credited accounts payable for, it's 4. 4 times 360 is $1,440. And folks, this is the same for every buy on all 4 methods. All 4 of these methods, that's the same thing. Okay? Because that's what our vendor did. They sold, we bought them. 4, 300, I mean, there's nothing that changes here, right? What's going to be different is going to be this, and since this is different, that will be different. Okay, so now what do we have? Well, I still have, and so I do my layers. I still have those 2 $350 ones, but I also have 4 $360 ones, don't I? For a total of 700 plus 1440 is 2140. That's the total. You see that in your book, and you see it up here. So we have this line, and then we have this line, but I had 2 lines there, right? Save some room. I'm building my tiers, T-I-E-R-S, not T-E-A-R-S, my tiers. That I've got 2 of the $350 ones, and I've got 4 $360 ones. And now it's time to sell. And on the 15th, we sold 4. By the way, folks, the sales price is not on here. Would you look with me on page 373? It says, and it doesn't tell you until, well, it does. It says, it does tell you that somewhere that our sales price was $500. You will not see that $500 on this chart anywhere, on any of them. The $500 sales price is there. These are the sales, but this is the cost. of the sales. Remember, we have a big number and we have a little number back in chapter 5? Well, the big number is $500 to sell it. The little number is either $350, $360, or $380. What you're going to have here is the $350, the $360, or the $380. You will never have the $500 on this perpetual inventory record. It is all about cost. It's all about cost. You did sell them, but that's the cost of the ones you sold. Okay? Well, if we're doing FIFO, then the first ones that we had are sold first. So, will you watch this, and then I'll let you write it. We sold these two, but we sold 4. So we also sold 2 of those. You with me? So we sold 2 $350 ones, and that takes, you don't have to scratch this out, that takes those, they're gone. And we sold 2 of the $360 ones to leave 2 remaining, yes? So we sold 2 $360 ones. So what I have left is 2 $360 ones. Did you follow that? Can you do that? We had 2 $350 ones. Can you see them? Let's make these red and make these blue. Okay, just. So we sold 4, but FIFO says you sold the old ones first. So that's why we keep them in order of the purchases. These tiers are in order of purchases. So we had 2 red ones and 2 blue ones, or 4 blue ones. But we knew the red ones were the oldest ones, so we sold those first. We have no more $350 ones. But we sold 4, and 4 minus these 2 is 2 more. So we sold 2 blue ones. They cost $360, which leaves the other 2 blue ones still there. And you've got the answers right here. You've got it in front of you. So this is a total of $1420, and this is $720. How did I get that? A couple ways. 2 times 360 is $720. Also, 2140 minus 1420 equals $720. Mathematically, it's just a chart. We're just keeping track of which ones are still there. And we are assuming right now, page 373, FIFO. Our cost flow assumption is FIFO. Whether we did FIFO, LIFO, average, doesn't matter. We probably just grabbed one, and put it on the shelf. Okay? Any questions so far? Well, then on the 26th, we bought, that was on the 15th. On the 26th, we bought some more. And this is always the same. Your buys look the same on all 4 cost flow assumption charts. 12 $380 ones. 12 times 380 equals $45.60. Now what do we have? Well, we still have these 2 blue ones, but let's make these green, okay? Just some people, that really confuses them, but some people that's helpful, okay? They're now green. And so we still have 2 blue ones, 2 of the $360 ones, but we also have these 12 green ones, which cost $380 each. You with me? I'm keeping track of my tiers, oldest to newest, and so that's a total of $52.80, which is also $720 plus $45.60 is $52.80. Right? Mathematically, this times this equals that, this plus that equals that, and this times this plus this times that equals that. Mathematically, it'll work. We're just keeping track of what we've got on hand, so we know when to reorder. Okay? And then we sold. On the 31st, we sold some more. All right? Your sales are going to be different under the 3 before methods. And we sold 10. We sold them for $500 each. The 500 is not on here. but we sold 10. Well, FIFO says we sold those 2 and 8 of those. I'll do that again. FIFO says we sold 10. We're going to sell the oldest ones first. But 10 minus 2, we sold 8 of those. Okay? So those will be gone, and that will be down to 4. You with me? 12 minus 8 is 4. So what we've got is 2 $360 ones, the green ones, and 8 of the $380 ones, the green, right? Which is a total of $37.60. So far, so good? And what do we have left? Well, I already kind of adjusted, didn't I? 4 $380 ones, the green ones, gives me $15.20. Okay? This is my ending inventory. I have 4 of the $380 ones. I'm assuming cost flow assumption. And so my inventory on my current asset section is that number, $1,520 for this cart, this thing to sell, this inventory. I can also add these numbers up, $1,440 and $45.60, and that gives me a total of $6,000. 4 plus 12 is 16 units. Now, I don't really have to put anything there because some are at $360, some are at $380. But I bought 16 and I spent $6,000. Maybe 210 net 30, maybe we did returns, maybe we had whatever. I also know that 1420 plus 3760, 5180, that's my cost of goods sold for the month. And it was 4 and 10 or 14 units. Now again, 350, 360, 360, 380. I'm not going to put anything there. But of those 14 that I sold, some were blue, some were red, the cost of them was $51.80. So far, so good? If I looked at my T account for this particular part for inventory, I started with $700, 2 $350 ones. I bought $6,000 worth, right? I sold $51.80 worth, and guess what? I have $1,520 left at the end of the month. Okay? Now, your question should be, why am I doing this thing? Why do I need to do a perpetual inventory record? I'm glad you asked. It's for the journal entries. It's for the journal entries. We can then know, and to keep track of what we have on hand and what we sold, keep it all organized. So we know at the end of the month that we have 4. We know here that we still have 2. We know here we still have 14, right? So we know what we've got. We know what's in inventory at any point in time. We know which ones. But also, we can make a journal entry. This journal entry, debit inventory, credit, accounts payable, $45.60. This journal entry, debit cost of goods sold, credit inventory, $14.20. Or we could do one a month. Debit cost of goods sold, credit inventory, $51.80, and not do it on every day. Just do one a month. This is to do the journal entries. That's the journal entries. This one when we buy, this one when we sell. Are we together? Okay. I'm going to keep going then. On the next page, we do, actually, we've got the journal entries on the next page. This is a review of Chapter 5. Debit merchandise inventory, credit accounts payable, $14.40. The only, and you know me in my absolute terms, right? The only time we need the 500 is doing journal entries. The $500 sales price is only for journal entries. Just journal entries is when we need the 500. You don't see the 500 up there anywhere. But every time we sold them for $500. So the gross profit on this one is $150. On that one's $140. And on those, it's $120. 500 minus the cost, right? But the 500 is not on there. No 500. Okay? But we know that we sold for 500. So, on August the 5th, page 374, the journal entries for this. And they did them one date at a time. August the 5th, debit inventory credit accounts payable. August the 15th, 2 entries, we said. The seller has 2. The accounts receivable and the sale for the big number, 500 times 4 units, is $2,000. Do you see that in your book? That's when we use 500. But also, debit cost of goods sold credit inventory for that number, 1420. Okay? And then we buy some more on the 15th, or sorry, on the 26th. Debit inventory credit accounts payable for cash. On the 31st, 2 entries. Seller has 2 entries on, right? There's our debit cost of goods sold credit inventory, but also debit accounts receivable credit sales. We sold 10 times 500 is $5,000. You see that there? What you're going to see, if we were to number these journal entries, 1, 2, 3, 4, 5, 6, number 1, 2, and 5 are identical on all 4 methods. 1, 2, and 5. Every time you buy, it's the same amount. Whether you're using a specific FIFO, LIFO average, it's always the same amount. The journal entry is the same. This will never be different. And when you sell, if you're selling for $500, no matter which ones you're assuming you sold, so your accounts receivable and sale, $500, those are always the same as well. Okay? So number 1, actually 1, 2, 4, and 5 are always the same. The only ones that are different are when we record debit cost of goods sold credit inventory. 1, 2, 4, and 5 the same, 3 and 6 different. So far so good. So let's look at LIFO. I'm on a roll. Stay with me. Put on your rollerblades. Let's go. So same information. And you know what? I'm going to leave that up there because it's the same. But I am going to take this off. And because that changes, actually that one stayed the same because it was a purchase first. But all this changes, right? Good. If you had a sale first. This would be FIFO. And then I'll show you the LIFO. If instead we assume LIFO, whether we're doing FIFO, LIFO, or already done on that, okay? So we can use LIFO for gasoline. We can use FIFO for nails. So we can, right? We can choose a method, stick with it. In this case, though, we still have the 2, 350. This one didn't change because our first thing was a purchase. So that's still 2140. Right? 700 plus 1440 is 2140. Okay? No problem. All right, on the 15th though, this is LIFO. When we sell, the most recent one. So we're going to go to the bottom here. Because these are in chronological order. That's the oldest, that's the newest. But LIFO says sell the newest ones first. So when we sold those 4. Do you follow me? So we sold 4 $360 ones. They're gone. And all I've got left is 2 $350 ones. Okay? Which is 700. And that would be 1440. So 6 minus 4 is 2. 2140 minus 1440 is 700. And you notice this is different from what we had on the other one. Because the other one, we had no $350 ones left. All we had was 2 $360 ones. So far, so good. We buy, and now we have 2 $350 ones. We don't have any $360 ones. We sold all 4 of them. And we have 12 $380 ones. No 360s. We bought 4, we sold 4. And LIFO says we sold the most recent, so they're gone. That level's gone. If we did this in nails and we had colors, then the 350 ones being the bottom of the barrel, those were the red ones. Then we put 4 blue ones on top of that, and people picked up the 4 on the top. There are no blue ones left. All we've got is the red. Now we're throwing the green ones on the top, so all we have is red and green. 350, 380. You following? And that's a total of 5260, which is also 2 plus 12 is 14. But we want to keep our tiers. We're going to keep them separate as to when they were bought, their prices. And then 700 plus 4560 is, that's 5260, sorry, 5260, didn't have. Okay, and how do I get that number? 2 times 350, 700, plus 12 times 380 is 5260. Also, 700 plus 4560 is 5260. Either way, both ways, check your accuracy. Mathematically, it'll always work. Don't ask me why, I'm not a math teacher. I'm an accounting teacher. Last math class I had was in 1976. I know. You weren't even a sparkle in anybody's eye.
Do you choose what costing method you're going to do based off of what type of stuff you're selling?
We have a whole section on which one do you choose and why. That's a very good question. Most of the time you choose what your industry is using.
Okay, so if you were like a grocery store, you'd probably choose like first.
I don't even know what they use for Publix. Anybody know? I have no idea. I'd have to look at Publix's financial statements. My guess is they're probably using FIFO as their inventory cost flow assumption, but I don't know that. So, interesting. But it's disclosed in the notes to their financial statements. It is a required disclosure which one of the methods they're using. It is there. Just don't know what it is. Good question. Okay, when we sold, now we're selling, this is LIFO. So we're going to sell from the bottom, right? We sold 8 of them. 10. We sold 10. So we sold 10 of these. And that leaves 2 of those left. So 10 $380 ones. With me? So what I've got left at the end of the month is 2 of the blue ones and 2 of the green ones. 12 minus 10 is 2, which is 1460. I can also do, that doesn't change, but this did change, 5240. The number didn't change, 14, but the cost of those changed because it was different ones. This would look like this. We started with 700. We added 6,000, but we took away 5240, which leaves us with 1460. That's LIFO. If you'll turn the page, we've got the journal entries. And for me, mine is a spiral bound, and I can actually compare. I could take it out and put it side by side. Entries number 1, 2, 4, and 5 are identical on both illustrations, both pages. The 1440, the 2000, the 4560, and the 5000. Those are going to be the same no matter what. What is different is this is 1440 instead of 1420, and this is 3800 instead of 3760. We still have 4 units, but we assume that it's 2 $350 ones, the red ones, and 2 $380 ones, the green ones. You following? Okay. What I'd like to do now is let you practice. Short exercises 2 through 6. We'll do as many as we can until lab time. I am on page 406. We probably should stop that